Hey everybody, welcome back. Sive is here with the Forex Peace Army.com. So let's discuss the trading plan on your accounts. Although, guys, in the current circumstances, as you understand, it's very difficult to make any trading plan. Just because the Donny has pressed the button and actually the showdown in the Middle East has started. I do not expect anything good from this, and I do not expect really fast victory there. So it will be really tough conflict that could lead to unpredictable results. In fact, everything that we will discuss right now probably could make sense on Monday morning. So because the open price might be sharp, and actually based on the performance that I see on the cross-market analysis, I would say the odds a bit higher in favor of the downside open on the euro currency as well. Just a few reasons for that. First of all, through the whole previous week, we talked that market doesn't look quite bullish. So the performance that we see is not typical for the bullish market, and it definitely seems that market is held by something. It might be just expectations of investors, just the pause of the investors waiting for the results of this coming situation around Iran. Now, when all cards stands on the table, investors could act, make the action. And here is we see, well, maybe not quite contradictory, but a bit curious performance. So if you take a look, for example, on the action that we have on the 10-year bonds, this is, guys, weekly chart. Just take a look what's going on with the yields on the United States bonds. They have dropped miserably. This is skyrocket demand for the bonds in the United States. If I plot the daily chart, you could see it even better. What is happening here? It's just in the February, the yield dropped for the 3 decimal point. It's a really big drop, even more, 35 decimal points. It's a really big move. If you transform this in a price, its approximately duration for 10-year bond stands around 6. So it means that the price has jumped for approximately 2% on the 10-year bonds. This is a very big move. At the same time, you do not see the same story on dollar. If you take a look at the fall time chart, we have some grabbers have appeared, yield has dropped, but you do not see big demand. So dollar remains in this triangle consolidation in the same way as the euro currency stands. Yes, it is forming after upper action, and despite these grabbers, when everything stands right now on the table, I wouldn't be surprised too much if I will see on Mondays a big spike to the upside on the dollar, just because of this divergence between the demand for the United States bonds and flat performance on the dollar should be resolved. So it obviously should be some demand for the dollar as well, because this is clearly happening on the background of the safe haven, run into safe haven. So I'm not excluding this situation. Now returning back to the euro, we do not have evidence on the euro currency. It stands in some consolidation here, but every time I'm recalling the situation on the cable. So with this free drive, that illustrates perfectly what I think might happen. So cable just taken a bit, well, better shape for analysis because it shows clear patterns compared to euro currency, and it's a bit more handy to deal with the performance on the cable. But results for the euro currency for the cable might be similar. Both could just keep moving slightly lower. I don't know in what way it might happen. It might be fast spike and return, or it might be gradual downside performance. So some things you can see already on the cryptos because they are trading on the 24/7. Forex now is not functioning, but things that we see currently on the cryptos, it's my echo on Forex as well, just as a demand for the dollar. So that thoughts that I have currently in my mind. If we take a look at the fall time chart on euro currency, here's also some bearish signs exist. First of all, divergence is ready for a long time ago, but we do not see anything to the upside. We do not have upward action. And in general, as long the market will stand here flat after the collapse, as more signs of the bearish dynamic pressure it will take. It's already taking it, just because take a look here we have bullish MACD, but price action on euro doesn't look bullish. It also start looking bearish. On the hourly chart, I do not have any specific patterns for discussion, and in general, I don't think that actually the hourly chart is usable right now. It's on Monday, in the blink of an eye, everything will change, and I do not see any reasons to discuss this, because anyway, we will not able to do anything, just because we will get the fact right for the first second of the Monday open, and situation will change drastically, I suppose. But despite that, actually triangle keeps door open for both scenarios, as for the upside butterfly that we talked about, as for the downside butterfly that was also talked about. My suggestion is that, well, taking it all together, situation how the results of the conflict that we see currently, the way how it's going, performance of the 10-year bonds, performance of the crypto market, situation on the cable, taking it all together, my view is that odds a bit better for a downside performance in the beginning of the week. So from that standpoint of view, I do not see any reasons to gambling right now and think about what might be, what will happen, just with this thought in mind that bearish open has more chance to happen. Let's see what we will get, and I suppose that it will be much more clarity on the next week, right in the morning on the Monday. So we will get absolutely different environments, suppose, and it makes sense to build a new strategy when we will get this information, not gambling right now. In two words speaking, concerning the situation, it's not very good currently. As a conflict is showing not very good progress. First of all, United States troops have to be retired from the near standing air bases, just because of the rocket attack. So they have lost these airports. Second problem is that United States Navy has the arsenal for defending for a few days. So it's 4, 5, maybe 6 days, but then it will have to retire. What will happen in this case? Yes, Israel will have to stay one by one against Iran and Yemen. It will be not very good combination. So also pay attention how this conflict is covered in the media. Mostly you could read only Israel media, and that reports on the big success, but you hear nothing from the Iranian media. And also tells something, that's probably situation, well, it's not so just one-sided. That's what I think currently on this. And well, in general, Donald Trump has made really big bet that could cost him the political career. It's bet might be the source of as a big fall, as a big rise. So it's a really, well, I would say it's some kind of the tough moment, it's culmination point for the history in general and for the global economy as well. So that's probably all for now. Let's see what will happen. I will try to cover some big events of this conflict in a Telegram, but I do not want to pay too much attention to it, because we still have the Forex. Our primary object is the Forex market and in general financial markets. That's why I will try to minimize this information and put only most important things that could really make impact on the markets in general. Some decisive, maybe some turning points in the conflict. I will not cover everything, just because it could take a lot of space and it will be boring to read it. So that's probably it. Let's just see what will happen on Monday morning and return back to this question on Tuesday.